In this video, I'm going to talk to you about some of the most common home buyer mistakes that have been happening in the last 3 to 4 months. So let's get started right now. Hey everybody, this is Mike Campos with San Diego Funding, and in order to help educate and empower you and your clients about home ownership, I like to share some tips and tricks about all things home finance. And today we're going to talk to you about some of the most common home buyer mistakes that have been taking place in the last 3 or 4 months that I've been having to help with to help make sure that we close our transactions. So let's get started with the video right now. Alright, the first mistake of the day is that home buyers have been getting pre-qualified, not pre-approved. And what does that mean? Well, in a pre-qualification, you call a bank, like a credit union or a major bank, they take your application by phone, maybe pull your credit and tell you everything's going to work out great and you get the best rates possible. Where in some circumstances, the customer's documentation may not support getting that loan approved. Here at San Diego Funding, we collect the buyer's credit report, their tax returns, their pay stubs, their bank statements, and we work through all that documentation to make sure that that pre-approval is accurate as possible up front so we don't have any issues during the loan process. Here's another good one. When home buyers try to sneak in cash into the equation, we simply cannot use that money. Due to federal regulations, we cannot use funds that have not been verified covering the last 60 days. Whether a customer transferred funds from their savings account to their checking account, if the customer sold a piece of equipment or a car, or if they received gift from family members, that is absolutely okay. But we cannot use pillow money to help purchase real estate. Getting new credit accounts or spending money on your credit without consulting your loan officer is a huge mistake. Sometimes if you purchase things on your credit card or purchase a new automobile or create a new finance account can impact your loan. Whether that's because you have new debt that reduces your credit score or because that new debt impacts your monthly income to debt ratio, you can create a problem. So, talk to us first. I get calls sometimes in the middle of escrow. Hey Mike, can I go buy this sofa real quick? Will I qualify? Will I have a loan approval issue? Hey Mike, I'm thinking about buying this car. Can I go do it now? And sometimes the answer is yes, and sometimes the answer is no. But if we know ahead of time, we can save a lot of drama. And last but not least, if you did it, we will find it. And what that means is that if you had a foreclosure or short sale or anything negative on your credit report, that for whatever reason it does not appear on your credit report, the banks will find it. So if you had a foreclosure or a short sale within 7 years and it may not appear on your credit report, just let us know. We're on your team. By us knowing ahead of time, we can address the challenge appropriately and avoid future issues during your purchase process. So if you like more information about these mistakes that home buyers sometimes make, or if you have any other questions about all things home finance, feel free to reach out to me on my links below, and I look forward to talking to you soon.